and have put money in the market and think they're safe, but unfortunately, they're the people that are going to lose a lot of money. People with their 401ks and all that sort of thing, in different funds. And also too this year, baby boomers. Some of the baby boomers, since the 1st of January 2008, some of the baby boomers, sorry, have been allowed to access their superannuation and take that. I think it was Robert Kiyosaki in his book that, or one of his books that stated that. I mean, that could cause a big correction on the market as well. So I mean, all these things are important. So I guess the key thing is just to take note of this. And I mean, even if you think that this video is bull, you don't believe that there's a big crash coming, that's okay too. I mean, it's just keep an open mind about this sort of thing. But I seriously think that this is just one link in the chain. One link in the chain, and basically there's going to be a huge downturn market, and that's coming very, very soon. I think, in a way, history is about to repeat itself. Especially, I mean, you're getting all these things that are happening. If you think back to the 1920s, I mean, obviously it's way before my time, but what was termed the Roaring Twenties. I mean, we've had a huge market bull run for the last 3, 4, 5 years, and I mean it's kind of the same if you compare the Dow back then to what it's doing now. There's a lot of similarities there. And will the market crash in 1920 in 2008? What I have done for you is got a chart here, and it's comparing what happened in the Dow in 1929 versus what happened in 2007, leading up to 2008. And if you have a look at this chart as I'm speaking with you, you'll see there's a lot of similarities. I mean, there's another YouTube video, I think, that he goes more into detail with with candlesticks and short-term timing. But what I think is happening is, like I said, history is absolutely repeating itself. And there's a few key things to note, which I'll go through with you in a second. But what you should note is basically down here. If you see down here, you've got the dates, and what's actually happening is in the green is the Dow, is what happened on the Dow in 1929. So you've got here the lead up to 1929. That'll be 1927, 28, leading up to the big crash. And down here was the Nasdaq into comparison as well. But the Nasdaq is actually, as what you can see in black, is actually from here, 1997, sorry. And basically overlapping those two charts, if you have a look, they're very similar. As you can see there, you've got a nice solid rising uptrend there, accelerated uptrend up here, and basically at the peak here, as you can see there, in 1929, the market crashed, and this actually is in sync with 2000. Remember the dot-com boom here, right here, leading up, dot-com boom, and basically you saw some of the big internet companies they were making millions of dollars. And eventually that outgrew itself, and people sort of realized that it had grown really, really quickly, and a few major bad reports had come out, and the market did crash. Yes, it took the same amount of time to crash, but if you have a look down here, a slower term crash was in sync with what happened in 1929, 1929 through 1930, 1931. And I think we could go through the same sort of thing, but there's probably something more important, and that's the lead up. So obviously we're in 2008 yet, but if you have a look, from 2003 right up to the end of 2007, an overlap on the Dow back in that would be back in the 1930s, compared with 2003 to 2008. If you have a look at that, they're very similar. Have a look at some of these patterns. Up here, very similar the way it's all played out. Nice solid rising uptrend there on the Dow, and that was back in 1930s. compared with, the 2000, what was that, 2006 to 2007. Some of these graphs, you overlap them and they're very similar. But the most important thing that I think you should notice out of everything here would be what actually happened at the end of 2007, which, I mean, the Dow finished okay for the year, but if you have a look at what happened in the Dow, I think this would be probably in the 1937, around about then, could be what's going to eventuate this month or possibly next month. If you have a look here, the Dow actually dropped down here from about 190 down there, and it took nearly a full year, but it actually got down in the 1937s to 100. So the market actually nearly halved in that time. And I think what you're seeing right now, if you have a look here at the dates, 2008 to 2009, and you have a look at the timelines here, the start there, which could be a major correction in the first half of this year, and then maybe a small correction on the upside, and then another down little sell-off. But you can see here from 2008 to 2009, and you compare that time up here, things are not going to be pretty. I guarantee that things are not going to be pretty. And like I said, there's a few things that need to happen beforehand. There's a few links in the chain that need to break. But after that happens, there's going to be some catastrophic events. It's going to send people broke. And like I said, I think we're already in the start of a recession that will lead into a hyperinflationary depression. So I think it's interesting just overlapping those two charts just to see and just to give some proof technically that the market is in a lot of trouble. And I think from where we are now, we could be actually weeks away from a big sell-off on the market. So that's what I think is happening at the moment. So like I said, even if you don't believe in stuff like this, you think it's just a load of poppy, that's fine too. Have an open mind. I mean, looks like from the chart that you're seeing in front of you right now that we're actually following closely to what was happening from the 1929s through to the 30s. I know it's a long time ago, but I mean, as they do say, history does repeat itself. So it's still one of the things that I think that's very important, and it could play out exactly the same. I'm sure about that, but technically, you should be short in the market at the moment. Maybe long gold, long oil, futures in oil. If you do that, I'm sure you'll make a lot of money. If you try and go against the market, then you're going to be devastated and depressed. So basically, just take everything with a grain of salt. But it's just warning. My job here today was just to warn people and about what could be coming. So yeah, thank you for watching this short video presentation. I hope you got a little bit out of it, and hopefully it'll help you in the coming weeks to months to make some money. Alright, I want to thank you for watching this video. Hope you got a bit out of it. Have a great day, and talk to you soon.